Today, I'm up just shy of $115,000 on the trading day, and today was a textbook model day. And this was the exact trade I took, which made me $115,000. But before we go over the trade, let's talk about my bias. Let's talk about why this was textbook and why I really like this setup. So, starting off, bias. Well, if you look at higher time frame narrative here, coming into the open, price wasn't too clear. Overnight price and higher time frame was at a pretty consolidative state here. We initially saw a good pump a couple of days prior through the state of Monday's price and then through the state of Tuesday's price. But coming into the open, since price was so consolidative and we weren't seeing price do much, there was no clarity in what we wanted to do. But what we did do is mark out some important arrays, which we did see price trade into. First things first, recognizing overnight price. If you look at the state of ES and NQ, what you're able to see is you're able to see that NQ was much more weak in this sell through overnight price than ES was, right? Initially, we had come back down, and you see the state of ES here coming into the New York Open, but specifically with overnight price through Asia and through London, what you see price do is you see price just drive down a lot better. How are you able to tell that? Well, look at the gauge through our overnight highs and lows. Look at the state of Asia through ES, London through ES, and look at the state of Asia and London through NQ. You see NQ off the London high create a much more significant lower high, right, off the high through Asia compared to ES, right? So you kind of mark out this high, put it out here. You could see that there is a much more lower high being created. Another great way, I always use this as well, is take out your rectangle zone and mark out the range from high to low. So if you mark out the high of overnight price, which is this Asia high, and then you mark out the low, what you could see through our low between NQ, and then you also go to ES here, and you do the same thing. You mark out your Asia high, and then you mark out your overnight low. You could see coming into the open, you see NQ trade at a lot deeper of a price than what ES did through our range, right? So range high to low, you could see that ES was trading more so around the CE of the market coming into New York Open. So right 9:30 a.m. right here, you see 50% point, right the halfway point. So kind of stuck in the middle of the range. But NQ was literally at the bottom of the range coming into the open. So that's a great way to identify, okay, how do I determine, which asset is weaker? So from there, after determining that, what I simply did after recognition and that NQ was weaker was mark out our higher time frame PD arrays. We had a couple of good PD arrays. We had an hourly gap fill here on NQ. We also had a 4-hour gap fill here as well. And then we also had an hourly and a 4-hour gap on ES as well. For me specifically, knowing how weak we were on NQ coming into the open, what I wanted to see price do was trade into these arrays. And I wanted to see price fill it. More so specifically because I wanted to see a clear opening range move. And NQ's opening range move, which if you guys don't know, I have a video on this on my YouTube channel. With the opening range move with NQ, we end up seeing the opening range move occur off almost a minute into the open, right? This London low here ends up getting taken out at 9:31 a.m. Eastern Standard Time. ES does not create its opening range move all the way up until right here, which is 9:33 a.m. So about a couple minutes later, we see ES eventually come down here and trade, 9:34, excuse me. 3 minutes later, we see price on ES eventually come down and finally have its opening range move. So that's another great way to decide on which asset is weaker and which one is stronger, right? NQ having its opening range move lower before before ES. From there, what I wanted to see was a reaction, and this is important, and this is why I was able to develop the bias that I had and be able to take the trade that I did. I wanted to see a reaction. We waited. We sat, waited, and we waited for a price to have a reaction through the low that we took. I marked out this 5-minute gap here on ES because this was a 5-minute displacive gap, the best gap you could work off the New York Open, which was also created during New York. And I wanted to see what price would do. Had we taken out this London low, seen a bit of a retrace, respect this 5-minute bearish gap, and then traded back down lower, especially with NQ being weaker, as we've discussed, you look for downside, right? Clearly, because you see the hourly time frame filled, and if we see a violation of this hourly gap, it's very clear that price most likely wants to draw lower into higher time frame gaps and levels. Well, what do we see price do here through the ES Open? We see price sweep our London low, and then we see price trade back up here. What I want to make of what I want to talk about really more so significantly is the two components we look for in reversal trade. Lenta, why'd you go long? Well, two main components in our system, as we always talk about. if it's a bullish long, obviously a bullish reversal long, we want to make sure that the low that we put in through that potential reversal back up higher is a significant low. And you could tell through our London low, through our hourly gap fill, and then through our 4-hour gap fill, you could see not only was this a overnight low that we took out, but it was a higher time frame area of interest we took out as well. So you see multi-time frame alignment, the hourly, the 4-hour, the 5-minute time frame, all align and put in a low at the same time at all different levels. And so we end up seeing price then come back up, and then component number 2 for reversals is looking for displacement. And the reason you see me mark out this 5-minute gap through our live trading is because of the fact that I knew, okay, whatever we would do based off this 5-minute gap would give us a good indication of what price wanted to do, right? And we see price immediately come back up off the sweep of the low, and we see price displace through. We end up seeing NQ kind of do the same thing here and displace through back up after initially putting the low off the hourly gap. And so that is when this came into play. Potential long into play, 5-minute bullish inversion fair value gap. London lows swept, hourly gap fill ES, right, and hourly gap fill on NQ. Liking the lows, now just need to see clear displacement. This was at 9:47 a.m. Eastern Standard Time. And you see me more so mark this out in the fact that, okay, we've put in a really good low now, and now we're starting to see some build back up, right, or price build back up. Now what I want to see is price continue to do that. And if we see price come all the way up here and we raid this 5-minute gap, we could look for a potential reversal and higher. Like we always talk about, chat, when it comes to reversals, we are fixated on R, but we're also fixated on probability. And what drives up probability is when you have consistency in price. And so for me to see price come up here and displace past this 5-minute gap, that's consistent enough in terms of bullish displacement for me to think, okay, this is no longer just a retracement. This could potentially be in the reversal in the market trading up higher with the displacement that we got and with the low that we put in. And we eventually end up coming here and we end up taking this idea long where we end up taking entry right here, confirming at 9:52 a.m. Eastern Standard Time. And what do you know? You see me mention that right there, I am long, right at the 9:52 a.m. closure. I mentioned I am long. We also happened to take this trade live. Our break-even point on this trade ended up being London highs, and our take profit one was the Asia high. And you eventually see, obviously, price come up. We go break-even stops, and then we have our target one smashed. From there, all it simply was trailing our stops. Here's obviously the execution on my Tradeify and Lucid accounts. They met consistency today, and we ended up just simply trailing along the way, right? Trailing 7.540, 7.547, and then our TP2 ended up getting hit for about a 2.1R here. And just a beautiful move in the market. But here's the one thing I do want to go over. Leto, why the hell would you long ES today instead of NQ? NQ clearly looked better coming up and inverting this gap before ES did, right? Because NQ was playing around off the endpoint. At around 9:50 a.m. is when we closed, and then ES ends up closing 2 minutes later at 9:52. Leto, NQ closed 2 minutes inverting, or NQ inverted this gap 2 minutes before ES. Why not take NQ? Well, here's the thing: recognition of price. Look, just as we talked about, higher time frame and also overnight price. What were we able to tell? Price on NQ was the weaker asset. At this point, we were also more volatile, but NQ was the better asset to long overall, even though NQ in this instance for today inverted before because NQ was much more displacive in the sell. So if you ended up actually longing today on NQ, you most likely would have closed out for a break-even trade. But for us, longing on ES, we end up seeing a beautiful move back up where we capitalize on a tremendous long. And so we end up taking this trade, as mentioned, because A, of that component, and 2, I just wanted to see more displacement on ES prior to taking a long. You eventually end up seeing me stuck with this. We take our entry, and we see beautiful movement. Again, what I did today is I simply overrode taking NQ and taking ES because of the fact that price on ES was holding a lot better compared to NQ. We ended up taking a long, and again, our stop loss was based off this wick low. We could have used the model stop, which would have been this area of interest here, right? The candle, the fair value gap candle open or the fair value gap candle low. We ended up seeing price come up here and a beautiful move back up into TP and again onwards. This is pretty textbook, or as textbook as it could get. I guess the only thing that would isn't A+++ or the best trade ever is because of the fact that our higher time frame narrative was not A+ clear before the open, but it was after the open. We just had to wait a bit. But again, the reason this is so textbook is because we had higher time frame alignment alongside lower time frame alignment, and we see a beautiful sweep and a beautiful textbook model long. Like this is something I could frame and put into our trading strategy video where I use this as a perfect example of how our system works. That's how textbook it was today. So a very good day overall where we caught a beautiful long and took the right asset to perform on, and closing out for about $115,000 across all my accounts. Yesterday, I should have been down more than I was. I was only down 41,000. That's because I was in and out during the live taking important calls, so I only executed on my personal account. I'm assuming if I took that, I probably would have been down around like 80, 90. But now I'm back up to over $100,000 on the week, and obviously the community is very green. We've had two out of 3 days be green and capitalized very well. So with that being said, that's the recap. See you guys in the next one.